All right, gold climbs to record highs as rising inflationary and geopolitical concerns spurred demand for an investment safe haven. Gold hitting a new record high of $14.57 an ounce, $16 more than the previous high set on March 24th. Wow. Here to tell us how investors should play the precious metal group is ETF Trends editor Tom Lydon. We also have Jim Urio, TJM Institutional Services. Welcome both of you to Power Lunch. Jim, let me start with you. As we are watching these commodities scream higher, what message are the markets giving to the rest of us? How should we interpret that?
Well, it's a couple different messages, actually. The one that's been long-term and has been pervasive is this kind of growing mistrust in fiat currencies, which is reasonable because every time any different country has some sort of recessionary problem, the first thing to do now is to inject liquidity and try to soften your home currency. So over the years, gold is becoming more attractive than that. Now, on a shorter-term basis, the things that have happened in Japan, the crisis, which is now really crushing the yen, because the feeling is they got to figure out a way to inject liquidity and to loosen rates. I know they're already close to zero there anyway, but they will figure out a way, and that's hurting the yen. So now if you think of it this way, there's in the past there was this safe haven list that included the US dollar, and below that the euro and the yen, where sovereign wealth was kept. Now if some of those things, at least two of those things, would be calling into question, the dollar and yen, well then the other things on that list are going to gain in importance, and that's why people are flocking to gold. That's one way to look at it. Another thing too is that with the thing happening in Japan, all the other global economies are ejecting liquidity as well to try to cushion themselves from that, and that money ends up somewhere, and it's going into gold and all commodities.
All right. Let me turn to Tom, if I might. You know, you follow, Tom, the ETF world very closely, and there are a half dozen or more ETFs that invest in gold. And it sounds like a layup, a very easy way to get exposure. I don't have to take physical possession of the metal. I don't have to have it assayed, whatever. But there are differences in these ETFs, aren't they? And would you explain to me what they are and what I need to know to be a smart buyer?
Sure, Tyler. Well, you know, basically, while we have this perfect storm with gold right now, you do have choices. You can go in for the first time and buy the metal itself. There are three main ETFs that actually have physical metal in vaults in London and Switzerland, where you actually own a piece of that.
Which ones are they?
So you've got State Street, GLD, iShares has IAU, and also there's the ETF securities that have gold based in Switzerland. So if you want to diversify, great choices, very liquid. You can buy them in the morning, sell them in the afternoon if you want. Again, in the old days, you're having to have storage issues, buying coins, commissions. Right. Not as easy as it is today. But the other thing, go ahead, I'm sorry, Sue.
That's okay, finish your thought, Tom, and then I need to go to Jim.
Sure, yeah. Well, the other thing is today you also have miners, same liquid in ETFs, and the idea is even if gold prices plateaued at this point, it only takes $700 to get an ounce of gold out of the ground at this point. Profitability levels are high, and with the market vectors GDX and GDXJ, you've got some great opportunities to get into those miners.
Jim, I buy your theory on gold with the fiat currencies, the fact that longer term the dollar's safe haven status is being eroded rather rapidly in some cases. The yen, the debt ratio to their treasury market is too high, certainly some of the highest in the world. So I get why gold may be doing what it's doing, but what about silver? I mean, it has not traditionally had that safe haven status. Is this a change, or do you buy it?
No, it's funny to me, and it took me a long time to try to figure out why silver is acting the way it was. $20 ago in silver, we could make the argument that it was partially an industrialized metal and partially a precious.
Whoops. Okay. Well, that's another Chicago
I guess somebody
shot.
didn't like what he was saying about silver there, right?
He's back with us.
Is he?
Jim, we missed the first part of what you said. Quickly. And you're going to have to wait for that because we lost his mic. Jim, we'll get back to you. All right.
Okay.
We got him? Okay, Jim, very quickly.
You got me or no?
We got you. 20 bucks ago, you could buy it.
20 bucks ago, silver was a kind of viewed as a precious metal and an industrial metal. I think that the industrial part of it is out the window unless there's going to be a huge boom in flash photography sometime in the next year. So I think it's solely being considered a precious metal. But because of its value compared to gold, if we ever got to a point where it was really used as a medium of exchange, it becomes more practical. An ounce of gold worth $1,500 is great if you're buying a house, but if you're really going to exchange metals for things and you want to buy a loaf of bread and a pack of cigarettes, silver's price probably makes it more attractive. Does that make sense?
Yes, it does. And on that note, thank you for bearing with us. We appreciate it, both of you guys.
Thank you.
All right, coming up next.